So first, I know everybody knows John and Bruce, but I will let each of you introduce yourself. Bruce, do you want to start?
I thought we'd make it interesting, and I'm going to introduce John, and John's going to introduce me since we've done this before.
Time, and Bruce works for one of the finest venture capital funds in Silicon Valley that happens to have an incredible portfolio in Israel.
Stop. Anyway, it's great to be here. Bruce Taragin, Blumberg Capital. We are based in San Francisco, but very proud to have an office in Tel Aviv. We are a seed and something in the oven that's, I think, ready. We are focused on seed and early stage, mostly seed and Series A investing. And my partner David and I, David Blumberg, we've been together now for almost 2 decades. And we've invested in really across the globe in probably about 60 or 70 companies for the last half a dozen or so years. We've invested in probably 1 new company a month. And it's been fantastic. We recently had a company out here called Nutanix that just raised $165 million at a valuation of $2 billion that we seeded when it was 3 founders coming out of Google with an idea. Just about 4 years ago, we have a Canadian company called Hootsuite in the social media space that just raised at $1 billion that we seeded a few years ago as well. And we actually exited some of our stake for about a 53x last year. And then we have most recently out of Israel, Cyvera, a security company that in less than a year and a half, we exited for about a 20x as well. And just amazing entrepreneurs. So I would just say, I'm sure there are many entrepreneurs in the room right now. Maybe entrepreneurs, raise your hand if you're entrepreneurs. And I would just say, thank you. And it's a privilege to get to work with each of you. And hopefully we get to work with more of you. And, we're currently investing out of Fund 3, which is $150 million and very active. And some of you may know my colleague, Alon Lifshitz, who's based out of Tel Aviv.
I'm John Medved, and I'm the founder and CEO of something called OurCrowd, which has become the most active investor in Israel over the last 18 months. We've completed 50, Audrey just said 52. 75 million now. No, 75 million, I've got to keep on getting updates. 75 million invested in 18 months in 52 different companies. We're only about a year and a half since launch. We're probably the largest team in Israel now. I'm not sure I should be proud of that because it means we're spending money, but we're about 60 plus people on the team. Our mandate is to get to the point where we'll be investing ourselves on our platform about $1 billion a year in Israeli startups. That's what we're trying to do. It's a sort of a different model than other people. We're doing a deal a week, roughly, in terms of new investments. We invest as part of syndicates where we put money alongside leading venture capital funds like Blumberg, and we've done now 5 deals with Coastal Ventures and with Battery and Bessemer and Canaan Partners and General Catalyst and who knows who. Lots of corporates also. And what we do is we offer these investments on our website to accredited investors only. In other words, you have to have a minimum net worth of $1 million or an annual income of $200,000, and then you get to see essentially, I guess, a venture kind of Chinese menu, which will show you, opportunities that are currently funding. These are companies that we have chosen through a series of diligence. We take about 2% of the companies we see. We put our own money to work, and then we actually manage the investments. It's not sort of crowdfunding the way that you might have heard about it before on Kickstarter and whatnot. We actually, obviously take equity. You don't get a T-shirt, not yet. We haven't developed a good T-shirt, but you get a piece of a partnership which owns stock in these startup companies. And we've had our first exit already. Very proud that we owned almost 8% of a company called Rewalk, which we did 2 rounds of investment. The first one about a year ago, the second one about 2 months before the IPO, and Rewalk became one of the most successful IPOs of the year so far. So that's what we're doing.
Okay, and I am Hanan. I'm a corporate partner at Herzog Neeman, and co-head of the high-tech practice, together with my partner Maya Netzer, who is traveling around here. And we are glad to be a sponsor of this conference. So the main theme of this fire chat is what we expect in the next 10 years in VC financing. Obviously, I think that nobody knows. If the two people here knew, they would not be here. They would be doing the other stuff. But we'll try to touch about a few themes. I think my first question is to you, John, meaning touching upon what you said. The group of investors you have is not the typical VC investors. So how would you characterize them, and what are they looking, and is that something different than what was 5 years ago in terms of people investing in technology companies?
Yeah, no, big time. Look, as Bruce knows, and everybody here as a VC knows, that one of the less pleasant parts about being a VC is raising your fund. Okay, if you've got a great track record like Bruce, it gets a little easier, but it's still a pain in the tuchus. Okay, no one likes to raise a fund. Okay, and something you have to do to keep your business alive.
We love it. We love it.
And what you do is you raise the fund from institutions, from banks, insurance companies, endowments, very, very large family offices, and you try to focus on checks that are $5 million to $20 million, certainly in a fund like Bruce's size. If you're bigger, you take $50 million checks. And I had been there and done that. I had my own venture fund called Israel Seed Partners together with Alan Feld and Michael Eisenberg and Neil Cohen, and had lots of fun doing that, but I wanted to do something different. And what I think is happening is that there's just a huge shift, not just in our industry, but many industries, to the private individual investor. There is $50 trillion in accredited investor hands worldwide, $50 trillion. About 99% of these people have never made any of these investments. You can take all these wonderful companies and take the hundreds and thousands of them that are out there, and they just have never played in this game. Why? Because they don't have access to the deal flow, because they don't understand it. And yet, we all know that you should have a portion of your portfolio invested this way. Okay, you know, whether it's 2% or 5% of your assets should be in alternative assets, there should be a chunk of that in this kind of stuff. So yes, we're dealing with a whole different crew of people, but it's sort of fun because it's endless, and because I have an ulterior motive. Okay, I have to admit, I like the notion that I am building an army of people, Jewish and non-Jewish, different colors, from 54 countries, who, while we're investing in companies all over the world, are primarily investing in Israel. And with all this bullshit, excuse me, about boycotts and somehow trying to hurt Israel, we're busy building this army of people who are saying, you know, this doesn't make any sense. Israel is a great place to be investing. And, you know, so we're making money on it. We're going to do this, but there is an ulterior motive here for me.
You know, I think it's great, obviously, what John's doing. And what I would add to it is what I've seen sort of on the venture side, the shift over the last 10 or 20 years, and the theme, you know, kind of the title I would give it is this democratization of entrepreneurship. You know, 10, 15 years ago as a fund, you know, we made 4 or 5 investments a year. We saw a few hundred companies a year. That's exploded. You know, there's been this democratization of entrepreneurship. You know, back in the 60s and 70s, everyone went to Sequoia, you know, Klein or Excel, et cetera. And that's just not, you know, the case today, you know, with platforms like John's. And I think with, you know, funds and there's been a whole bunch of themes that are really driving that, enabling that, you know, function, that they don't need to necessarily raise 10, 20, $30 million, you know, for a switch or, you know, fiber optics company or something like that. And so I think this is the other side of that. It's this, you know, democratization of, you know, capital. What strikes me listening to you, which is funny, is if I think back, you know, and I guess it reminds me of just we're coming off the holiday. You know, most of you or some of you may speak Hebrew. You know, "Ein chadash tachat hashemesh," which, you know, there's really nothing new under the sun, was, you know, what King Solomon said, and I think there's wisdom in that, because, you know, I think about it. Our first investors came into our fund because they wanted access to all these Israeli technology companies they couldn't get access to, that they were seeing post IPO, and they kept coming back to us and saying, "There's the same 10 names that were getting into all these companies out of Israel. How do we get that access?" And that was in the early 90s, and they, you know, some of them invested in our, you know, funds to sort of get that access. And I think, you know, John, you're taking it, you know, an order of magnitude. You know, just the funnel is just opening, you know, wide, as well it should. And I think it's fantastic that now there's this democratization, not just of entrepreneurship, but, you know, of capitalism in a sense. And clearly that's where we're heading. And there's going to be different folks, whether it's a Kickstarter or an AngelList, that are attacking You talk about trying to get to $1 billion on your platform. I mean, Kickstarter's had multiple billions of dollars, being funded across their platform. And, AngelList probably has 25, 30,000 companies that are, posted at any time, on their platform. So I think that that's a massive shift. But I also think, even the venture funds that are more traditional like we are have also evolved tremendously, where, again, 10, 15, 20 years ago, I'd look at 400 or 500 companies a year, and almost all of them were either Silicon Valley or Israel. Today, as Tom Friedman said, the world is much flatter. We're looking at 5,000 companies a year, and we've invested in companies from Japan, from Vancouver to Tel Aviv to Berlin, Hamburg, and we're there all the time, and trying to cover these things, and then fundraising as well, which is not lots of fun. But actually, I would say, and John can probably agree, it gives us a lot of empathy to the entrepreneurs because we know what it's like. I mean, you're trying to raise a Series A for $5 million. We're trying to raise that Series A fund for $150 million, and it's also quite challenging. And we too, like you were a startup at Israel Seed and OurCrowd, we're a startup at Blumberg Capital. I mean, David and I have been together for 20 years, and we've built out a team of investment professionals and infrastructure and support. But I think we really have a sense of empathy for the entrepreneurs, and maybe that's one of the differentiations for us as investors is A, having been operational, and then B, understanding how hard it is to really, launch a fund and perpetuate that brand. I mean, something like 20% of all venture funds don't raise fund two. Are successful, in raising fund two. 80%, go home.
So I guess, obviously, we see many more funding models, being it bootstrap, accelerators, crowdfunding, and on the other hand, you see all those mega deals. How do you face, I guess, as entrepreneurs that you are proposing him a $2 million investment based on $5-6 million? How do you convince him to take that and not go to some other stuff? And how does the valuations of the mega deals affect the discussion?
From our perspective, and then John can jump in as well. To me, something that's changed, for example, 10 or 15 years ago was like convertible notes. I mean, they just didn't really exist, or some of the Series C terms. So we've really tried to, create some uniformity so we can be logical and efficient, with, great firms like yours to just not create a lot of, red tape and bureaucracy for getting them funded really, really quickly. And, in our experience, the companies that have been most successful are the ones where, and our mantra is we lead the seed. It's where we lead the seed. We're in 92% of our investments we lead. On average, after 5 years, we still own over 16% of the company. We're on the board. We're actively engaged. We are truly partners, and we're very aligned, with the entrepreneurs. I think I've always been a fan of alignment of interest, whether it's with our LPs who, David and I started out, we stayed at Motel 6s, we fly coach, we still do. Not Motel 6 as much, frankly, but we still fly, we still fly coach. And, there's alignment of interest. We're not managing this $1 billion fund where it's all about management fees. And, that's why, our funds are up over 50% annualized and really performing in a meaningful way because it's all about upside. Similarly with the entrepreneurs. I mean, we're aligned with the entrepreneurs. It's just about success and them, executing the hell out of their business. And, I think we take a somewhat different approach and philosophy. So I do think, mea culpa on behalf of the VCs over the past 10 or 15 years, and the venture model is somewhat broken. But we've really tried to take a different approach of being partners, with the VC, with the entrepreneurs that we're investing in. So if you need us to go to trade shows, we love that. I mean, nothing gets us more jazzed than to hop on a plane, help you on sales, marketing, business development, help you knock down some of those first customers. And if you speak to some of our entrepreneurs, we've done that. We try to do that. And I think there has been this shift where, you are the kings, or queens. We are maybe the maker of kings or queens, but we are not royalty. And, too often I think some of my peers on Sand Hill and elsewhere, read too much of their press and hype and, et cetera, that have lost sight of that. So that hasn't changed. I don't think that will ever change. In fact, the pendulum is swinging much more towards the entrepreneurs. So we just have to not lose sight of that. And as Golda Meir said, don't be so humble, you're not so great.
The model is changing. And for example, if you look at the role of angel investing today versus what it was 10 or 20 years ago, it's just completely blown up. Okay, I mean, in other words, everybody's, at least in the Valley, not the 99% of the people who we're dealing with aren't angels, but here and in Israel, there's tons of angel money, and you're seeing far more rounds getting done without any venture guys, okay? Without, where people easily put together a $5 or $10 million angel round, either outside of our platform or outside of venture funds. That's different. The crowdfunding component is different, and I think that's going to become, quite large, and there are now dozens of platforms out there. We happen to be the biggest by far. We're far bigger, by the way, than AngelList in terms of money raised on platform. We don't have as many companies listed. We're curated, but we've, I think, outraised them probably by a factor of 2. We've outraised companies like Circle Up or Funders Club or others. So I'm sort of proud of that we're based in Jerusalem and we're leading the world right now in terms of equity crowdfunding. But that's going to become bigger. You're seeing a rebirth in corporate venturing. Okay, the corporates are back. Okay, they're writing all kinds of checks. I was just talking to somebody today from an Asian company, and he was describing the 4 different venture organizations this one Asian company has, and I said one's not enough, and no, they have to have 4 because they can't cover all the areas and whatnot. So that's becoming, and they're going much earlier. We announced a partnership with General Electric, was a big venture organization, a big team in Israel, and yet they're now working with us on OurCrowd, cherry picking the best deals that they are interested in. And we just announced our first investment with them, where they invested in a company called Medved, which does big data analysis of prescriptions to prevent errors. And this is we did a total round together, us and GE, of $1 million. So to think of GE making those kinds of investments and their size, things have clearly changed. But it's really a story of the best of times and the worst of times, because there's elements on both sides that are weird. For example, Israel is booming right now in terms of dollars going into tech-based startups. This year, my guess is we'll probably hit $3 billion in terms of investment in Israel, probably about 700 different companies. And yet the percentage of that $3 billion, which is going to be invested by Israeli VC organizations, is less than 20%. So is that good news or bad news? Okay, probably bad news if you're an Israeli VC, probably really good news if you're an Israeli entrepreneur, okay, because it means that all the guys here are getting on planes and saying, screw it, I know it's punishing, it's a 24-hour journey, we don't have these direct flights, which we need to, okay, from San Francisco, but I'm going to go there and put my money in directly.
We've talked to your prime minister. Can you talk to him? Because apparently we can't persuade him on that one. We've tried the direct. That was my one question I had when I met him.
He will give his
$2 million that solves that problem, okay? But so, big money, little local domestic, shrinking domestic industry, if you will. Exit sizes getting much, much larger in Israel. The average M&A exit's now up over $80 million, which doesn't sound like a lot in the Valley, but for Israel, where we specialized in the 20 and 30 and $40 million exits, an average at 80 is a good place to continue building. There have been 8 different exits at $1 billion level over the last 18 months out of Israel, which is, unheard of that we've got that kind of thing. So I think it's very dynamic and very different. And, apropos what Bruce was saying, I think it's really a good time to be an entrepreneur. Because you got all these options, and you can go to the big funds and the little funds and the angels and the micro funds. And there's just so much happening that if you're really not getting funded, then you're not trying hard enough.
Yeah, I mean, there's clearly an abundance of capital. And, I think for entrepreneurs, it's thinking about, this is a long-term partnership for you guys. It's a marriage. There's no divorce. I've always been an advocate that due diligence should be bi-directional, and you need to think about who you're taking capital from. And especially today's day and age, it's so easy for everyone to get a 360-degree view of one another in terms of a diligence process with LinkedIn, et cetera. It's fantastic. So now more than ever, entrepreneurs should be really selective in thinking about who are the right partners, to help build a disruptive business.
Touching upon something you said, John, typical VC work, especially early stage, work very closely with the company. Sometimes the entrepreneur feel too closely. With the number of deals you're doing, how do you work with companies post-investment?
So we are sort of old school. We feel we have to work with the companies. We don't want to just raise money, write them a check, and say, vaya con Dios, see you at the exit. We want to actually take board seats. We take board seats in 70% of the deals we do. So, we won't pass a deal up because there are 2 other VCs and they've got the board and there's no, position for us, but we try to take board seats. How do we sit on 51 boards? We don't. We have a group of mentors who are working with us, who are ex-CEOs and experts in the industry who can help these companies grow. They represent OurCrowd. OurCrowd, by the way it works is that all the individual investors get aggregated into a single special purpose vehicle, and we write one check to the company. So if we've co-invested in a company, we actually led around in one company we did, and then we followed them into another company. We have 2 deals together, if I'm not mistaken.
And we may have closed another while we're both talking.
I
We don't
hope
even
so.
know.
But
My cut on that?
the one that we led was a $14 million round. How much money did we raise in that? BioCash, 12?
Yeah, in that range.
You know, it was some big number, up over $10 million.
Over 10.
Yeah, we invested, I think, something like 3. I can't remember exactly. You know, they came in with us with 2.5 or something like that. And so we're finding, which is interesting, is that the VCs are working with crowdfunding platforms, at least with us, okay, and I think with others, that, you know, many people said, well, you know, how are you going to get any deals that are really VC quality? Aren't you going to get all the, in Yiddish, there's a word shrayas, which means the scraps that come off the plate. You know, aren't you going to get the second-rate sort of B deals, the extras or whatever, the factory overruns? And it just hasn't worked out that way. And I think that what we're trying to do, and the added value that we bring, is that typically one of our deals will have more investors than there are in this room at the moment. We're averaging somewhere between 100, sometimes as much as 200 investors per deal. And guess what? That's not a bad thing as a company to have 200 motivated people with all their connections. And what's happening is we're engaging in what's called crowd building, where these guys get involved and they say, oh, my brother works at Microsoft, or my kid is just graduating MIT. And it's sort of a pain because it's a lot of work, but it's really valuable work, and it becomes very valuable for the companies because it's no longer just about my Rolodex, which isn't too bad, or my partner's Rolodexes, but it's about our thousands of investors' Rolodexes, and that becomes a formidable weapon. We're trying to develop software and methodologies that we can really deploy that on behalf of the companies.
So moving a little bit to deal with geography, I think you mentioned that until a few years ago, transactions in the Valley, people wanted to have a car drive to the board meeting.
A bicycle.
Bicycle. Mike Moritz said bike.
Yeah,
Okay,
exactly.
sorry,
No cars.
I'm too young, I guess, for that. And this obviously has changed. Do you see that going back, or is that never going to change back?
You know, I think there's a little bit of a changing of the guard, really, maybe to answer your question too. I think there's been this, evolution of, some of the top funds on Sand Hill, Sequoia, Kleiner, XL, or maybe not Sequoia, Kleiner, XL, what they were then. A lot of them have evolved. XL came, one transaction away from not raising their next fund. Facebook, perpetuated them and took them back into the stratospheric sort of layer. And I think so a lot of these firms have gone through some changing of the guard, and a lot of the entrepreneurs, we see it in our companies. I mean, an average age sometime, is, 23, 26 years old, a lot of these entrepreneurs. So I think many of them are sometimes, looking for peers, younger, partners that they can invest with. So I think it's very challenging for some of the incumbents to, survive and thrive potentially. Obviously, there will be some brands that are great, but I think OurCrowd came from nowhere, really. And over the last few years, it's amazing, the impact that they're having. Or you look at, a company like an Andreessen Horowitz, a First Round Capital, and some of these other groups that, again, 10, 15 years ago, these brands didn't even exist. And now if you look on the list of the most active venture funds in the world, they're on it. So I think you're seeing that. And I would go back to my earlier point of this democratization of entrepreneurship. Our whole feeling, and aside from being, Zionists, us as a fund, we're fiduciaries, obviously, and first and foremost, we're focused on, stellar performance and returns for our LPs. So Israel, we're investing in Israel because, I think it was Fred Adler, one of, David's, mentors, it's brains. It's just amazing technology innovation coming out of that market. Well, guess what? There's amazing technology innovation coming out of Berlin, Vancouver, Tokyo. There are some other regions around the globe. And so, I think the world is flat, and that's changed. And to really win, you have to be proactive. You can't be lean back mode, and you've got to attack the market and find those opportunities. And the entrepreneurs want to work with, similar-minded investors and entrepreneurs that are hungry and attacking.
But I think the interesting corollary to what you're saying is that you guys are really different in that regard. Okay, I don't think most VCs are flying to Berlin or to Vancouver.
You're right.
For deals.
Right.
Okay,
I think you're right, but I think that they're sleeping a little bit at the wheel and reacting a little bit late, and some of them are going to lose as a result of that.
We have some guys here from Montreal. How many VCs have been up to see you lately? You know. I mean, it's just it's bizarre. We by the way, we've been a big beneficiary of this because this is stupid. This is really stupid. Okay, to think that, well, if it's not here in the Valley or in Israel, it doesn't count, right? There's no other innovation. The only innovation is going to come from here. Okay, it's hubris. It's insanity, and it doesn't make business sense. So, I mean, one of the early deals we did is this company called Surgical Theater, which is a cool story because it's two Israeli flight simulation guys who were standing in line at Starbucks speaking Hebrew, and this guy taps them on the shoulder and says, "Are you from Israel?" And they say, "Yes." And he says, "Well, I'm a brain surgeon. What do you do?" And because it was near Case Western Reserve, and they said, "Well, we do flight simulation stuff." And he goes, "Oh, cool. You know, I've been dreaming that I could get like a flight simulator for my brain surgery so I could practice placement of aneurysm clips and whatnot, you know, before I open up somebody's head." Probably a pretty good idea, right? In other words, better that your brain surgeon has been inside once before. And normal people would have ran away, you know, in horror, but these Israelis said, "Hey, let's get together and talk about it." So the company gets born, and they're making it work, except they have one major problem. They're in Cleveland, okay? Who is investing in that garden spot? Nobody. Okay, you know, they were calling guys from Boston and from New York and Silicon Valley, and they heard the story and they like it, and they say, "Well, where are you?" "Cleveland." Okay, like gone. No one's going. No one's. And so turns out one of our partners in deal flow comes from Cleveland. And so he said, "Hey, I'll go out there," you know. And so we said, "Okay, go see it." And we love the company, and we invested. We've now invested, I think, in 3 different rounds with this thing, and it's off to the races. And we've got an investment in San Diego, which I always thought, like, what's the big deal? Get on a plane from SFO or Oakland to San Diego, what's an hour? And the company we invested in, which is doing Hadoop sort of scalable clustering, it's got customers like Fortune 20 companies. It's a huge company. They couldn't get anybody down to San Diego because it wasn't biotech, right? Because, yeah, we'll invest in San Diego if it's life sciences, but not, you know, they forget like there's Qualcomm and you know, mobile technology. This thing about geography sucks. And therefore, what the good part about us and people like us is because the moment you put this up on the web and you know, apropos what Bruce was saying about democratization, this all goes away. It doesn't matter where you are. I mean, it's better to be in a location where you can hire people and get some local investors, but I think you're going to see a much, much flatter world in terms of access to capital.
So if you look at the main hubs of technology, be it Silicon Valley, New York, Germany, Israel, London, what do you think are the differences between what you have here and what is in those places?
First of all, you got to add China and India to both of those, among other places like Korea.
We actually
and
are
Japan.
not investing in China and India, in companies in China or India for those markets. I mean, we'd potentially, if they came over and built out elsewhere, but we're in all those other hubs, you know, Vancouver, obviously the Valley, New York, Tel Aviv, Berlin. I think they're all technology hubs of innovation. And, you know, the difference is the infrastructure. And I mean that, you know, very holistically. There's a variety of things that are potentially lacking in some of those different markets. You know, I was in Portugal at a tech event, you know, probably 2 years ago. It felt like, and I mean this in a nice way, it probably felt like 1985 Israel, you know, ballpark. They're trying, they're not there yet. You know, Berlin's probably, you know, more like 1996 or something like that. You know what I mean? So there's a lot more of that ecosystem there.
What exactly is lacking there? And what
you know,
I
mean, I think, and John's talked globally about this topic of sort of the, you know, the challenge, you know, this recipe of success that you have that exists in Israel and replicating that, and it's here in the Bay Area too. It's not all the pieces, but obviously, you know, the army where they're all, you know, being drafted, the, you know, budgets that they're getting in the intelligence unit, the, you know, amazing institutions like the Technion and Tel Aviv University, and having this entrepreneurship where, you know, I've gone to other regions of the world where there's such a stigma if you're an entrepreneur and you fail. I mean, literally, I had a friend who was in Japan and he had to leave. I mean, he had to move because, you know, he had failed on this, and he was contemplating suicide. In Israel, it's like, oh yeah, I failed twice. And there's not even the term of I failed twice. You know, I didn't, you know, exit, but it was not even a failure. It was a great success. There's no sense of let me try this again and I'm going to, you know, win and win big on the next one. So I think there's a culture There's obviously the ecosystem of, venture and, the right entrepreneurial talent. I mean, sometimes it could be hard. I mean, Cleveland rocks, but, you may not be able to find, all the data analytics engineers or something like that you might need there, or the machine learning guys where, we can get them out of Stanford. On the other hand, you will find them at a fraction of the price. So in each of these markets, we tend to see there tend to be, like, New York is different than Silicon Valley. Berlin is different from Tel Aviv, both in terms of pricing, in terms of the DNA of the teams, in terms of, the types of companies they're typically starting. I think you need to be sort of culturally aware and sensitive and intelligent about it. We often, again, we've been in this business for decades. We very much like to co-invest with like-minded investors in a lot of these different local regions so we can partner because, and maybe John might disagree on this, or maybe the answer is your network, but when things go south, it can be really challenging. I mean, there have been times where I can be on a plane, weekly, monthly, and that could be really painful if you're going to Cleveland or Tel Aviv, from...
What is worse?
There's the rock and roll,
how many times can you go? I've been there four times.
Get into the vault,
LeBron's there, so maybe it's, for better or for worse. But, so those are some of the things. But I think what we've seen also as a counter, let's say, to maybe some of the fluffiness you're finding in the marketplace, pricing in Munich and Berlin is fantastic compared to, let's say, Silicon Valley, which is, Israel's better than the Valley in terms of pricing, but still a little bit more price sensitive than going to, let's say, Montreal or Toronto, or Vancouver. So I think, there are different regions where they develop and have different centers of technology and innovation. And we're geographically agnostic. Our job is to find the best technology companies in the world that can disrupt, and it's all about world domination. That's what we're focused on.
By the way,
in a nice way.
But that's a huge issue for a lot of this geographical expansion, is that I've been spending time in a lot of sort of countries off the list that you spoke about. Like, I've been spending time in Brazil. I've been there twice in the last 2 years. And it's a great market, really dynamic and interesting, and actually some pretty cool entrepreneurs. There's only one problem. They never think beyond Brazil. Their dream is to be the biggest dog in Brazil, 200 million people, big market, finish, exit. Only one problem. How do I get a venture kind of return out of that kind of a company? And
that's been a blessing for Israel. We've never been distracted by the local
by the
market.
size of a market, right?
You know what I mean? And it's been the best thing in the world. I mean, to me, it's always been beta testing. I mean, you have 7 million people and you can beta test your product.
But by the way, what makes it interesting then is that you can come in, and we're getting ready, actually, I hope to make our first Brazilian deal happen. It's a really cool company. And we found these guys who are like going for it, who are, moving people to the States and working with Israeli companies. And I think it'll be really cool. We're doing our second deal now in Australia. It's another one. Australia's got great technology. I was there speaking at a forum about the Australian venture capital, sort of annual look back sponsored by KPMG or something like that. And they were proud to announce their record numbers of dollars invested in the year. And Australia invested $100 million in venture-backed companies. And then I was coming up afterwards with my slides, and I was trying to ditch the slide where it talks about Israel doing $3 billion, because I was embarrassed, okay? I mean, Australia is 25 million people, okay? It's 3 times Israel's population. They had 100 million. We're doing 3 billion. Something's weird here, okay? But again, part of their problem is that they want to be the big dog in Australia. They're not, I was sitting with one group of people who were sort of debating why is there this gap? Finally, this one genius said, well, it's because we're so far away from Silicon Valley. And I looked at him and said, yeah, how far is the nonstop from Melbourne or Sydney? And he said 13, hours. And I said, halavai, I wish, in Israel we had a 13-hour nonstop flight here someday soon. But anyway.
And just to put it in context, in the U.S., it was $13 billion invested this last quarter in about 1,100 companies. But to John's earlier point, I think it was about $200 million of seed capital. So from venture. So 80+% of the dollars are these billion-dollar funds throwing, $500 million into an Uber or something like that. That's, not what, John and I do and what we're focused on. And so I think there is this tremendous opportunity where the micro VCs, to part of your earlier question, the whole micro VC, and John touched on it, the whole angel ecosystem, it didn't really exist, 10, 15 years ago, the way it's thriving today. And, Hanan, one other point I think that is important, and why I'm actually very bullish, quite sanguine on Israel going forward, is the ecosystem. It's those angels that are not just, some real estate guy or whatever it is that, made money that's putting money into a company. It's the founders of Checkpoint, who can, Palo Alto Networks and, and so on, that can really, invest and add value. And some of these ecosystems are lacking that. And that's what's going to really take them to the next level. When a Berlin has a few of those wins so that they have some of those entrepreneurs, the founders of Skype, from Luxembourg and some of these other regions that really want to invest and give back and nurture, that next generation. And that's why I think in Israel, so many of these entrepreneurs now have sold out for the 80 million or the 150 million. I think over the next 20 years, we're going to see a Nokia or something of that nature come out of the Israel market because you know what?
God forbid Nokia.
But something that's going to be tens of billions of dollars in market cap because
It's called Mobileye.
yeah, fair enough. And I think there will be more because, there's going to be that patience now. We've made some money and we're going to look for the big hit. It's not, and especially the other thing that's changed dramatically is the whole secondary markets, which I'm sure, many of you are familiar with. So many companies that, companies of ours that are, at $1 billion, $2 billion, $3 billion now that are private, they're public, effectively, in my opinion. And these are not even private companies. I mean, Microsoft went public, sub $1 billion and raised, $100 million. And, 99% of the wealth creation was in the public markets in a company like Microsoft. Today, when you have an Uber or Facebook, Twitter, and so many of these other companies that are in the tens of billions of dollars, I mean, they're not really private, and there's tremendous liquidity for investors. There's a whole ecosystem there that didn't exist 10, 15 years ago as well. And that's changed, and it's going to become more dynamic. And then regulatory issues have really, I think, caused it to, become more pronounced and positive over the decade going forward as well. So that's not going to change.
I don't think you can overemphasize the point that you were just making about the serial entrepreneurs in Israel today. It really has changed everything. Again, the data is that over the last decade, there have been 900 exits out of Israel. So, multiply that by number of people per exit who really qualify as being an entrepreneur, or someone, the C-level people, the founders. So let's take 5. Okay, that means there are 4,500 people, and I have to subtract maybe a little bit for the guys over the last decade had more than one exits. But there are thousands now of people who've had exits, some more successful than others, running around Israel, which makes our life much easier. Of our 51 companies, I would say about half of them are behind serial entrepreneurs. People who've actually not just tried before, but have succeeded before. And we're seeing guys who've built, like we have a company now up on the site called Pixie, which is doing a location tag for the Internet of Things, and the entrepreneur has built $2 billion companies, and yeah, there's no guarantee that, 2 means you're going to get the trifecta, but it certainly feels a lot better, investing in a guy like that, or, I've got before OurCrowd, I have an angel investment in a guy who's had 5 exits over $100 million, okay? I mean, all right, he had 1 failure, okay? So, but those odds are great. And so you get all of these serial guys going, and it really, not only they start to help the other companies and write checks as angels, but they're coming back for round 2, 3, 4, and they've got that patience. There's now private equity in the country. We never had private equity in Israel. And now you got Francisco and KKR and Silver Lake. They're all, and domestic guys like Fortissimo and whatnot who've made money. And you can get now a 30 or 40 or $50 million check. I mean, Iron Source just did a round up near, I'm not allowed to say, but it was,
18.
Yeah. Well, how much they raised, but the valuation was, buku. And this is totally new. We don't remember things like this.
So do you approach, looking at different markets, do you approach doing transactions differently in terms of valuation, terms, team building, due diligence?
You mean in terms of the geography? Does that?
Yes. Does it change the way you look at transaction?
Yeah, I mean, absolutely. I mean, again, it's typically there's a very different market in, Berlin and Hamburg than there is, let's say, in New York versus Silicon Valley. And so it absolutely changes things. I get to one of my earlier points. It's about alignment of interest. So I always joke that if we walk away from a transaction, where we invest in a company and neither one of us are happy, it's probably pretty fair. So that's kind of
rough justice.
Rough justice. So that's kind of what I anticipate. We're partners, and the last thing we're going to do is demoralize the entrepreneurs. It doesn't make any sense. We're in this for the long haul, and we're never going to put any draconian terms there because they're going to just come bite us on the future rounds as seed stage investors. So we try to really keep keep it simple, stupid, and conform with things, and we look to folks like you to make sure keep us honest. And I'm proud to say that on so many of our documents we have like little or no comments because we're just very much middle of the road and kind of what's accepted.
I mean, I think we've both been sort of buoyant and optimistic, and I think, I don't want to say corrective, but one little bit of warning is that people should not forget that this is a cyclical business. And we are in still a very good phase of this cycle. No one knows how long this cycle lasts, if it's a day, a year, another 10 years, God willing. Okay, but
April 2016, that's my prediction. That's when things stop.
So if he's right, we got to hustle.
Exactly. Move it.
But the reality is that I think if you take a long-term sort of secular view of our business, and we've been around to see more than one cyclical change, it's going to be up and to the right. Okay, in other words, it's a great time to be an entrepreneur. You look at some of these trends. This is not at all the way it was 10 or 15 years ago. Okay, it is totally different. The Internet of Things is a very, very real, definitive changing event. Big data and analytics is going to change everything. Okay. The growth of personal health and mobile health and medical devices. And I just think that we're very privileged, those of us who are entrepreneurs or investors or VCs or crowdfunders, to be creating all this incredible and new stuff, okay, that's much of it very good for the world, and being able to, talk to people about their dreams and to facilitate that, we're blessed, okay? And I just hope that we just finished the new year. It should be a good year for all of us.
I think like Greenspan used to say, where's productivity coming from? And it's technology innovation. And if you look probably back in the early 90s at the S&P 500, technology companies as a percentage of the S&P 500 in the early 90s was, probably hovering around 10%. And actually in 2000, when, again, to quote, we're getting a lot of quotes here. You alluded to Dickens, we were quoting Golda Meir, we got Greenspan, we're running the gamut here. But, and Kohelet, was it Solomon? But in 2000, it went to about 35-ish%. But it's really been slowing up to the right, I think, to John's point. Now it's more in sort of the, high teens, low 20-ish%, and that's probably a healthy number, and it will continue to really go up and to the right because of, all the things like Greenspan's saying, what John's alluding to. I think it's just technology is, what's, going to be the engine that drives, productivity, for the, coming decades. So this is not, to my mind, again, getting to your point, is the market a little bit frothy? Yes, it's, again, the Dickens quote of the, best of times, the worst of times. There is, some irrational exuberance. There is, a little bit of a frothiness, but this is not 1999. I mean, we have companies that are doing hundreds of millions of dollars in revenue. It's sustainable. It's disruptive. There's major, the ubiquity of the smartphone. There's more, if you look at big data, which is such a hot topic, 90% of the big data has been created in the last 2 years. I mean, just think about that. And it's just this technology innovation in which driving it is, it's moving at such, a fast pace and, velocity that, will not be stopped. So I think technology is here long term. Might there be, some, bumps? Of course. I mean, there's a seasonality to what we're doing. We've been through, decades of different cycles, but, to my mind, this is not, there are business models here that are sustainable, that are disruptive, that are really, changing the ecosystem, from where it was.
So before we wrap up and go to sales talk before April, is there any question over?
I want to go back to your comment about the democratization of capital. And so I heard other people call it that venture investments are being commoditized. And when they are being commoditized, then VCs are kind of losing their competitive edge. And some of the VCs have actually started giving added services, added value services to accommodate their investment product. And so how do you see VCs handling that new threat of money being commoditized? Will they really add new services? And if they will, how will that would probably challenge their cost structure, or will they do it by outsourcing? And how do you see that in the future?
I mean, a couple of questions bundled in there, but I mean, if you look in like 2000, I think there were about 150 new venture funds created, whereas in 2012 there were probably 25 venture funds created. So, again, I mentioned we're a startup, so many of the VCs have gone home. I mean, they've just disappeared because you're absolutely right. I mean, they didn't deserve to be in existence. The returns weren't there. They haven't provided the value add that would enable them to get the entrepreneurs, et cetera, et cetera. So, we work for you. That's. I mean, I sat on a panel with a bunch of really big funds on Sand Hill Road, and they basically, someone asked the question like, "What's your job?" And they were like, "My job is to fire your ass if you don't do." I don't believe that at all. I mean, of course, there's a practical, yes to that, but that's not my job. My job is to do whatever I can to help you be superhuman and dominate the world. And so whatever we can do, whether it's recruiting, strategy on go-to-market, pricing analysis, hiring engineers, whether it means for us, bringing on recruiters, people that are focused on biz dev. Frankly, I would say that's what the venture model is historically, and mea culpa on behalf of the VCs that have strayed from that model. Sequoia's first fund was $3 million, and they were doing their job. Things have changed. It's become about management fees, and so a lot of these funds are going to just disappear, and they don't deserve to be here. Similarly, if there are entrepreneurs that are creating, 10 people doing the same thing, and they're not really differentiating and showing their value add, they're going to go home. This is, not a business for people that are, faint of heart.
Last question.
This is a question, well, it's really a question for both of you. But building on what this gentleman said about the commoditization of capital out there, what does OurCrowd bring to, what the perception from the venture firms that are inviting you in and are now chasing you into their deals? What do you provide? Is it another distribution channel? Is it PR? What is it different that they will turn out to the OurCrowd?
Look, I think we provide much of the same kind of services that traditional venture capital funds provide. We get our people on CNN and Blumberg, and we help them hire key people, and we're introducing them to strategic investors for additional checks, and we're doing, a lot of that. But what we give them is almost an army of people out there who are talking up the company. It was very interesting. We actually, today I just got a note from one of my people that we went to go see a company that had gotten some press recently. And they told my deal team, they said, we got about half a dozen unsolicited emails from people saying, "Oh, you should go to OurCrowd so that I can invest in your company." This was a startup that had press, that people started writing them, but I've got to figure out why they didn't write us to go there. But we watched the press and went there ourselves. They started writing the company saying, "Please go to OurCrowd, so otherwise, I can't invest because I've only got $25,000 or $50,000." These people are motivated. They want to help. And I think that there is a huge amount of help that the crowd can, provide these companies. The other thing is that we don't have time to have too much VC attitude. I don't talk about firing somebody's ass, okay? We can't. That's, by the way, probably one of the downsides of our model, is that when things get tough and you really got to work it out, okay? And we've been doing it. We have 51 investments. Not all of them are brilliant, but we haven't lost one because we do, roll up our sleeves and we work alongside our VC partners and our syndicate partners, to work it out. One of the things you learn later on as a VC is that usually that's time wasted. You should spend your time on the good ones, okay? Making sure they don't just be a 5X or a 10X, they get to the 50X or the 100X and just flush the bad ones quickly. You'll probably do much better in your performance. I got to run to the airport. So
Thank you very much, both of you. Thank you.
Thank you.